Hey guys, so this video is going to be about mortgage rates and how they're historically related to inflation, how those two kind of come together. So if you're hoping to buy a home this year, you're probably paying attention to mortgage rates, since mortgage rates impact what you can afford when you take out a home loan, and affordability is a challenge today. It's a good time to look at the big picture of where mortgage rates have been historically compared to where they are now. Beyond that, it's important to understand the relationship with inflation for insight into where mortgage rates might go in the near future. Freddie Mac has been tracking the 30-year fixed mortgage rate since April of 1971. Every week, they release results of their primary market survey, which averages mortgage application data from lenders across the country. Looking at the right side of this graph, mortgage rates have increased significantly since the start of last year, but even with that rise, today's rates are still below the 52-year average. While that historical perspective is good context, buyers have gotten used to mortgage rates between that 3% and 5%, which is where they've been over the past 15 years or so. That's important because it explains why the recent jumps in rates might have you feeling sticker shock even though they're close to their long-term average. While many buyers have adjusted to the elevated rates over the past years, a slightly lower rate will be a welcome sight. To determine if that's a realistic possibility, let's take an important look at inflation. The Federal Reserve has been working hard to lower inflation since the early 2022. That's significant because historically, there's been a connection between inflation and mortgage rates. This graph, it shows a pretty reliable relationship between inflation and mortgage rates. Looking at the left side of the graph, each time inflation moves significantly, shown in the blue, mortgage rates follow suit shortly, shown in the green. The circled portion of the graph points out the most recent spike in inflation, with mortgage rates following closely behind. As inflation has moderated a bit this year, mortgage rates haven't yet made a similar move. That means if history is any guide, the market is waiting for mortgage rates to follow inflation and head back down. It's impossible to accurately predict where mortgage rates will go for sure, but moderating inflation means mortgage rates going down in the near future would fit a pretty established trend. So the bottom line is, to understand where mortgage rates may be going, it's helpful to look at where they've been in the past. There's a clear connection between inflation and mortgage rates, and if that historical relationship holds true, the recent decline in inflation may mean good news for the future of mortgage rates and your homeownership goals. My name is Chris Weatherly, realtor here in Columbus, Ohio. Give me a call, shoot me a text, 614-302-0694. If you can, share this video with your friends. I'm very much appreciate it. You have a good rest of your day. Looking forward to speaking with you.